please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. We've been promising to get you more voices from Davos, so here is one more. As we are counting down to the budget, here are some of the key expectations that market men, corporate veterans are making to the finance minister. Let's hear out what veteran Rahul Bajaj expects from the FM this time around.
He has to win the elections. So some populism, he said this budget will not be populist, don't be surprised. But he's also said industries may not like this budget. So I don't know what that means. But I'd rather not think about it. No, I'll wait for first afternoon to find out. But you need land acquisition properly. Now, Mr. Kant and the government in Delhi will say states will do it. How many states are controlled by you, by the present government? At least Vasudhara started. Maharashtra started for that 100 to be raised to 300. I don't fall in that. I'm way ahead of that. It would not have applied to me. Back in the back burner. Politically, all the unions came, including the BJP union, BMS. Ki bhai ye nahi karne ka hai. So there are political reality, whether in land acquisition, whether in labor laws, whether in privatization, which is not been done barring Air India, where the majority goes or 100% goes, because this investment only helps. Some voters will come, there will be some accountability and some paisa mil jayega. Government will get some money. But I want government to, that's what will happen now in Air India, thank God, if they do it properly. Stop losing money, you sell it for free. If that company owes 30,000 crores and for loss, apart from acquisition of planes for which it has paid borrowed money, you have since the UPA government, 30,000 crores. Whose money? It doesn't drop from heaven. It's taxpayers' money. And you are giving it up because labor will shout. And when I was chairman of Indian Airlines, if either Indian Airlines, Air India didn't matter that time, it's a company with enough foreign airlines. Indian Airlines going on strike would mean, even though the poor at that time were not using the airlines, the economy would suffer. Today, if Indian Airlines, Air India closed down, barring the employees, nobody suffers.
All right, that was veteran Rahul Bajaj, candid as always. But let's move on. ICICI Bank's CEO Chanda Kochhar also reacted to CNBC TV18's news break of the government mulling allowing 100% FDI in banking. She differed from Uday Kotak's view, and she said that the decision making when it came to banks can't be left to global proxies. Chanda Kochhar believes that the movement of capital should not be restricted, as that would usher in greater buoyancy in the banking sector.
If we say that in the case of an Indian bank, you have majority foreign ownership, in the world where you are aware that global proxy advisors like Glass Lewis and ISS effectively have a disproportionate share how global institutions vote. Therefore, if majority ownership is, maybe even if it is widespread, the two decision makers or influencers are two global proxy advisors. Therefore, we should not fool ourselves that the decision making effectively has got much more centralized effectively in the hands of global proxy advisors, irrespective of individual holding in companies.
I've always believed that the more freedom you allow for capital movement, I think finally it actually shows up in the buoyancy of the sector. So I think we have to look at capital flow in that. So that's the positive of it. And in fact, if you look at the banking industry, there are anyway checks and balances in terms of who can take ownership. You know, RBI has that not more than 5% in some form and not more than 10% in some form. So I think that
Uday Kotak says we're not paying attention to proxy advisors.
Well, but I think there are a lot of checks and balances built in. So as long as the checks and balances are properly implemented, I think more and more freedom in movement of capital always brings efficiencies and buoyancies.
Okay, that's a very interesting and candid debate between top bankers of the country on whether more FDI should be allowed in banking or not. But let's get back to the big earnings. We told you all about Dr. Reddy's and what to watch out for there. The other index heavyweight that's going to be reporting numbers today is Maruti. We have Sonia now joining in with the key expectations. Morning, Sonia. So is it going to be once again a good, solid, steady quarter from Maruti?
Well, you know, Maruti has become like the HDFC Bank of the auto sector. Very predictable results, strong growth, steady numbers and no negative surprises generally. This time around, it'll be no different. The volume growth for Maruti has been pretty healthy. It's been about 11%. The response to many of the new brands like the Baleno and the Brezza have been quite strong. So the realizations will also go up about 3% on a year-on-year basis. All of this will take the overall revenue growth to come in at about 13% at 19,000 odd crores. We expect the margins to improve because the realizations have been better this time. So 15.5% versus 14.7%. However, on a quarter-on-quarter basis, you could see some hit in margins because raw material costs have gone up between last quarter and now. And you also have higher amount of discounts that the company has given on certain models. So that could impact the quarter-on-quarter performance. But year-on-year, it's going to be a steady set of numbers for the company. Profit growth of almost about 16.5%. Is what we're expecting to see this time around. Remember, the stock has had a dream run. It hit the 10,000 mark, that psychological mark, on the 20th of December, and it's had, it's been one of the big gainers in the auto sector. It's currently trading at around 24-25 times FY19 EPS, and most brokerages continue to prefer Maruti over a couple of other players, expensive stocks like Eicher, etc. So let's see a steady set of numbers expected this time around.
All through last evening, we've been telling you about the 88,000 crore recapitalization into public sector units coming in from the government. Let's get in Abhishek Kothari now to get a sense on how this tier 1 ratio of the banks will move after the government announces fresh capital for PSU banks. Who benefits the most and how basically does the capital structure change? Abhishek, tell us more.
Good morning, Mangalam. So, government has announced a recap bond of 88,100 crore. Remember that in Q3 FY18, by various methods like equity stake sale or non-core asset sale, 8 PSU banks have raised over 15,000 crores. So, all in all, after Q2 FY18 and till yesterday, PSU banks are recapitalized with more than 1.03 lakh crore. So, that's the amount of capitalization that has gone into PSU banks. Now, after yesterday's announcement, all the PSU banks, according to my calculation, the tier 1 ratio will be above the statutory limit of 9%. That is very heartening to see. So if you see, the tier 1 ratio had declined from last 3 to 4 years from 9% to 7.5%, and to some banks it was below 7% also. So now with bringing them back to 9% level, it's a very strong point. Who benefits the most? The biggest beneficiary is UCO Bank, followed by IDBI Bank and Bank of Maharashtra in terms of the tier 1 ratio increasing. Now, all these 3 banks are under prompt corrective action by RBI. So, they cannot do operation expansion while they have to bring down their asset quality or the gross NPA levels. These 3 banks will have the highest tier 1 ratio as mentioned, and clearly the capital outlay has been laid for weaker banks. Now, if this capitalization is used to make provisions for NPAs, the total capital infused as a percentage of net NPA, the beneficiaries are UCO Bank, Bank of India and IDBI Bank, according to my calculations. Back to you.
Nifty for you. That one's been battling some of the not so great cues from Asia. It's been holding out in positive territory. Was up about 30 odd points last time I checked. We'll just get it up for you on the screen in a bit. But right now, it's a good time to also take a look at the futures and options cues that we are getting. So, Mangalam, how are you reading the data today?
It is looking positive, Surabhi. The one thing that really stands out is the fact that usually expiry in cricketing terms is the 5th day of a test match. This time it's a flat green top. We've made 608 runs this series. The only thing which is attractive for options writers is the fact that ahead of the big budget event, the India Wix, that one is at a 14-month high, up 42% this month, up 30% this week, making the IVs on both the calls and the puts very attractive for people to write. So let's take a look at what are the options that are being written. Just ahead of the expiry in yesterday's session, 11,150 call added close to about 10 lakh shares. The premium is at 11 rupees. 11,100 put, remember, which currently, as of yesterday's close, is in the money. That one saw some writing for a premium at 42 rupees. So these option writers who would have perhaps written both the 11,150 call and the 11,100 put would be taking home about a premium of 50 rupees. Does that mean the traders are playing for a range of 11,050 on the downside and 11,200 on the upside. That only today's time will tell, but as far as the SGX Nifty is concerned, indicates a start above that 11,100 mark. Nifty Bank options will also be very important. The spot is closer to around the 27,400 mark. Maximum open interest is at the 27,000 put and the 27,500 call. But yesterday we saw a lot of action in the 27,700 and 28,000 calls, so we'll watch out for that. But that's as far as today is concerned. This series has been phenomenal. Let's go across to Nigel. He will give us a drop down, a lowdown on everything that's taken place this series. Nigel, 608 runs, and this is not the India-South Africa series that I'm talking about.
Absolutely. January lived up to its name. Just to take you through, what went on in the January series. Well, in fact, the Bulls, they were in full control. We had the best series that we have seen all the way since March 2018. And Jan has been a big mover. It lived up to its expectations. The FIs, they pumped in $1.5 billion. In 2017, we were talking about them missing out. This time, they are saying, let's get in the month of January itself. Well, talking about January, just take a look at some of those past Januaries. It's always been a big move of 500 points. Or this time, in fact, we're up close to around 600 points. And in fact, in terms of the best series that we have seen in the recent past, I just thought I'll pull out some data point. The March 2016 data point, that's a thing beyond us. We can't hit 160 points today. Actually, you never know. So we'll keep an eye out on that mark as well. But the key indices that did well this time around, obviously the Nifty Sensex, they're up between 6 to around 7%. But when the pillars of the market do well, the IT index and the banking index, then boy, isn't it good time. And after a while, I'm seeing the IT index up close to around 15%. In a single series. And the top gainers, you'll see that 4 out of the 5 top gainers, well, they belong to the IT space. Yes, bank in there, just sneaking in there. Otherwise, it's been all about IT. A few more gainers as well. Big boy, HDFC, that's gaining close to around 13%. And that always helps. And ICICI Bank is well up close to around 12%. There were some stocks that didn't do very well. Eicher Motors, after a while, I'm seeing that one coming in for profit booking, down more than 10%. And the OMCs, crude prices have been rising up. So it's not been too good going for them. And in fact, Bharti Airtel as well under some pressure. But if you're saying that the Nifty did well, the Nifty frontliners did well, take a look at the broader markets. Big gains, Pizza Time, JSPL, all of them continue with their good run. And in fact, you have a couple of other stocks like a KPIT as well as PC Jewelers. They're in there. Keep an eye out. Some of those mid-cap IT names as well, they find a mention. So clearly, IT sector has bounced back. But when there are big gainers, well, in fact, there'll be some big losers as well. Manglam's a teetotaler, but in fact, McLeod Russell, that's lost more than 10%. Dish TV as well, down close to around 10%. Short point, it's been a good start to the year 2018. Well, January series goes to the Bulls.
So, Nige, if I remember correctly, you had a bike, right, which you sold off. I think I need to do a correlation analysis between Eicher and when that was, when the turn happened, but that's for later, after the show. Right now, it's a good time to focus on commodities because with the weak dollar, we've seen quite a rebound in the price of both oil and gold. For more on that, let's go across to Manisha Gupta. Good morning, Manisha. It's 70 plus on Brent.
And it is 65 plus on WTI as well. So yes, very good gains is what you have seen in the overnight markets, more than 1.5% of its strength. And while, of course, the weakness in US dollar has been very supportive, it also has been about the US weekly inventories, which have declined for a 10th straight week. That has been supporting for the crude oil prices. And apart from that, it is the oil minister's statement in Davos yesterday saying that whatever output gains that we have seen from US will equal to the kind of decline that you have seen in output in Venezuela and Iran, etc. So all those countries, of course, have seen output declining, including Mexico as well, and that's taken the prices higher. So while the fundamentals are positive, you also are looking at the speculative long positions at record highs when it comes to crude. That in turn also has been supportive. And yes, the metals have been running as well. You have the gold prices trading at a multi-year highs. We have crossed above $1,350 per ounce. In the industrial metal space also, you have copper prices that rebounded by 3.5%, nickel that gained 5.5% overnight. Almost everything that is dollar denominated is doing quite well in this asset class.
All right, Manisha, thanks a lot for that. On that note, it is wrap up on this edition of Power Breakfast this week. In fact, we'll see you next week, but till then, keep it up with CNBC TV 18. Bazaar Morning Call comes up.